Stream.
There's a beer on the beach on a sunny day, makes everybody feel alright. What stuff you can drink it all, I'm sure as the rising tide. Yeah, beer on the beach on a sunny day, makes everybody feel alright. What stuff you can drink it all, I'm sure as the rising tide.
Man, not bad, huh? That will work. Hey, we start off Friday doing a happy dance before we even get started. Oh, gotta quit looking at it. Still got a lot of light volume up above it. All right, let me get organized here. Just double check a couple of things.
Took off for a weekend last month, trying to find all of the places and all of the faces, just wonder where they all disappeared. I didn't talk with the question to the Lord. I was hungry and I went up for a fight. Ran into the shop and they about to home and we got up drinking all night. You see changes in attitudes, changes in attitudes, say. Eating the parts of sides in some big airport reminds me of the places I've been. There's a good time to cross so much pleasure, make me wanna go back again. It's something tomorrow, but somehow it just didn't work out. The times and riches and some pictures I've seen, then I can read.
Just be aware, Japanese yen heading up to supply, Aussie dollar getting close to supply as well. And look at that, our 30-year, 10-year, and 5-year are right in that supply area. So we do have some other economic announcements coming out, so don't jump ahead of it. Or just kind of wait for a little confirmation as price might come out of that zone. And we're waiting on S&P. Actually, I'll step out of this one as it ordered. Waiting for price to come back up. NQ waiting on. Kind of got everything mapped out. All right, I'm gonna put up the prep screen zone. Take a moment to look over our economic reports coming out. Prep screen zones, we've had a couple of updates. We're near all-time highs again on it. S&P. Just look things over. And we'll get started here in about 3-4 minutes, okay? And happy Valentine's Day to Cracky. Good morning, Candlestick Shenanigans, and hey, Mr. Matt. You know, I've been bragging about you, Matt, the last couple of classes. You know, I've just been spending some time looking over the what you post in our Discord room, and you've just been doing some amazing charts in there. It gets pretty fun, doesn't it, when you know what you're looking for? And as we're waiting to get started, we've got about 3 more minutes before we start officially here. But just to give you an idea, if you guys are trading stocks, you know, in our Discord community room, you do have stock picks. Absolutely just amazing charts that based on what we teach, okay? It's fantastic. Oh, Abdallah's got some good ones in there too. It's your perfect past trade setups. You can learn a lot from just watching how your peers are drawing up charts as well. Thank you, Matt. Please don't pretend to know. Get started here in 1 minute. Nothing to show tonight. Oh, but everybody thinks that everybody knows everybody else. Nobody knows everything about themselves, 'cause there are words about everybody else. Yeah. Uh, can you I don't know if we can post in the ETF Discord. Yeah, we're starting. All right. Lights, camera, action. You guys ready for a happy Friday? Good morning. What a great little session so far. We're starting today is February 14th. Happy Valentine's Day, everybody. Okay. Guys, if you forgot to get the flowers, you know, after the live trading room, go out and make sure you take care of that. All right. We have a little bit of waiting to do today. And as the market is opening, okay. Couple things in the news, a lot of things that may impact what the market's doing as far as how I think we have all 13 of Canada premiers coming down to meet with our new administration. And, you know, a lot of things coming out with the Doge, and you know, it's hard to tell what things are going to come out of that, but you know, there's a lot of stuff. World leaders, they saw the writing on the wall, and everybody's kind of getting on board. They just needed one person to kind of get rid of all the garbage that's been going on there. You know, it seems like the biggest instigator was us, huh? Oh, Sam's Club has a dozen roses, $17. Awesome. Well, it's really great to see everybody. I'm really excited about a lot of us there. Oh, hey, Jerry. Jerry from Singapore. Awesome. Yeah, we have folks from all over the world right now. We have folks from Dubai, we have folks from Singapore, Indonesia, and Bali. That's where our team is located at. So, you know, it's just amazing how things are starting to pick up. So, very excited here. So, let's jump right in. I want to make sure that we have the setups on crude oil and nat gas. Okay, so our first strategy that we look for on crude oil and nat gas because of our start time is the open range breakout, right when the pit opens at 9 a.m. Eastern. Now I'm going to remove this 50 moving average because it's just kind of a distraction on the chart. But I want to make you aware of it on a daily chart. We have the 50 moving average, and price has just been going back and forth on it. Okay. As we start off, we notice the Globex range, 85 cents on crude oil. Compare that to the daily ATR, and we're right about the middle. Okay. Now, when the Globex range is about 50% of the daily ATR, we've noticed that it's a little more risk to take the open range breakout trade. So I'm going to back away from that and just wait for supply and demand. Okay. Hey, Dindy, all the way from Jakarta. Yeah, Jerry, you know, I love going down to Singapore and actually I'm relocating in just a couple of months down to Bali. So we're getting all that put together and I'll be working a night shift down there. That might be good. So I go to bed instead of stay up and trade all day. All right, so let's see. We got nat gas, our open range breakout trade. Again, nat gas, buck 20, or sorry, 12 cents is our Globex range. Looks like things are starting to get back to normal. This Globex range is a little on the wider side compared to the daily ATR. Okay. So when our Globex range is greater than 70% of the daily ATR, okay, we often look for the bull trap or the bear trap. And bull trap and bear trap are described by the first supply zone, first demand zone below or above the Globex high or low. Okay. So we use the Globex range and we compare that to the daily ATR. Okay. To get a feel, is this going to be more choppy on the natural gas and crude oil as far as trading it, or is it going to be more trending? So narrower range, we get more trending markets. Wider range, we get the bull trap and bear trap. In the middle, we get a lot of whipsaw. Okay, so we're right there on the wider range. So as far as looking for a trade opportunity at the moment, we're going to be looking at a potential bull trap, and I don't think we have anything lower than that. We got the gap fill. Okay, so we'll be looking for the the bull trap up above, bear trap down below. The other thing that we will keep in mind, especially when the Globex range is kind of in the middle, is you take within the first 2 hours before the pit open, you take the peak and the valley, okay? And we use that time differential, okay? Got a high peak right there. We'll stretch that over to the pit open, okay? So what I'm going to anticipate if I have a trade is in time, we should line up with a trade opportunity, okay? Now, this is a relatively newer study that we've been putting on, and it has been working quite well. especially if you're unsure about taking the open range breakout trade. Then waiting for price to either move up or move down, and then looking right about that time where we had a peak or valley inside the 2 hours before the market opened, okay? So there has been reports of more shortages on heating oil and natural gas due to the cold weather in the upper Northeast. A lot of consumption going on. And once things start to warm up, these trends may continue, especially on nat gas and heating oil, simply because the people that are selling have to replenish the inventories. Okay, so stay abreast of that. On nat gas, I am a little more on the bullish side, and if I'm going to take the open range breakout trade, I'm going to look for the opportunity to go long. Okay. And I'll set that trade up with you right now. Okay. 3.722. And I'll use about the mid-range in there, mid-range of the open range candle, first 5-minute candle, as a protective stop loss. Okay. So coming over to the matrix, 3.722 buy stop market. And once filled on that, then I'll come back and place my protective stop loss. Okay. Now, the target I'm looking for is 3.789. Okay. But I'm not expecting it to hit up there until, gosh, we're about to 10:30 or Eastern time. Okay. All right. So crude oil, already starting to see some of that whipsaw action. Okay. When the Globex range is about 50% of the daily ATR, it's best to kind of wait on that because you're going to get some of that whipsaw. All right. For index. All right, let's take a look around here. Let's start with the indexes. Now I left the prep screen zone on here. The
Order filled.
There is no prep screen zone left. Okay. I mean, once this one, I just left this one on just to show you how our prep screen zones work. We did take a trade short on that in the overnight session. Okay. Right now we're going to go up to all-time new highs. So let's just get that noise off the chart. And we're good to go. Okay. Now we do have some smaller time frames that we'll look at once we refine this. Okay. S&P is an outside day. Outside days are, we often look for the gap fill. Okay. If it opens inside the prior day's trading range. But outside days allow us to take breakout trades and zone trades. Okay. And for everybody that's watching, doing the YouTube and things like that, you have the ability to ask questions. Hey, Mick, good to see you. Yeah, please type your questions in if you have them. The team is watching for you, those questions, and so I can keep track of them. And they'll alert me when I have some. So we're just traders helping traders here. Dow 30 stocks still have a little light volume in the pre-market. We do have an economic report coming out at 9:15, 15 minutes before the market opens. So we got about 4 more minutes. What we've noticed with these economic reports is that we've been getting smaller reactions to price on the equity indexes when we have multiple reports coming out at the same time. Okay. When the report is standalone by itself, it has its own time. We've also noticed that it gets a bigger reaction. And this has just happened in the last 4 weeks of observation. Okay. We're always observing the market for when things are normal and when things start to change. Okay. Let's see. Russell was a small, narrow overnight range. S&P, NASDAQ traded outside the prior sessions while the YM and the Russell were still inside at the time I posted this. Trading conditions are different when the indexes are inside or outside the prior session's trading range. Okay. And we do have some other rules that we apply when with an inside day versus an outside day. Okay. Economic reports due out prior to 9:30. Metals have had a great bullish week, and we did see a big move on silver this morning. Yeah, silver has made a fantastic move. Now it's pulling back, finding that demand. Hey there, it's me. Oh, yes. We also seeing some of our partners that we're working with our Elite Trader funding. And we will be posting throughout our session some promo codes in our chat. And I strongly encourage you, if you guys are new to trading futures, use other people's money. Use a proprietary trading firm. Now, you do have some rules and things that you have to stay within, but they're not that hard. Okay. So I'll elaborate on that a little bit more as we get in. But Elite Trader Funding, glad to see you guys here. And always great to be working with you guys. Let's see. Okay, got silver. We talked about the metals. Oh, yeah. Gold may have another push at the high. That's what I'm anticipating there. Let's bring up gold. I got stopped on that one. But it's starting to come back out of that. Gold does have a little trick. So we're still right close to the proximal line. Still a good trade. I'm already trading the micros. Beautiful trade on that. MGC. Yeah, we're still in this one. We had a beautiful trade on this the other day. We got in right at the bottom of that tail. Those are the trades that we always want to get. Okay. Right there. That's a desired trade. Okay. And we're still in that one. And we're looking at price to continue on up. I'm looking at 29.92. We did have a timeline on that where we're going to look for price to get up to that level by today. So we'll see how that plays out. Let me clean this up here. Now, when you're watching us do some trading in here, okay, we lean more on the education side. The trading is just to illustrate what we do here, okay? So it's not about just trading futures. We can have the same setups on Forex, crypto. We're doing a lot of work on crypto right now for finding trades. And the thing to observe is what was going on in front of that trade. What did the picture look like on the left-hand side of the chart? How do we use that information to forecast turning points, finding demand zones and supply zones in the right area, and not just taking a chart pattern like a rally-based rally or drop-based drop, okay? You got to break it down to see where you can take low-risk trades, okay? All right, now let's go back to the S&P. We want to see if futures right now, S&P futures, are overbought or oversold relative to the cash market. The cash market that we're referring to is the Dow 30, okay? And this is what Dow 30 is a price weighted index, so we can do a quick little calculation to find out if futures are overbought or oversold relative to the cash market. So we take the number of Dow stocks that are greater than 94 cents negative. We got 10. and we got greater than 94 cents positive. We got 1. Net results, we have 9 negative. Okay. So if we take the 9 negative stocks and we multiply that 9 by 2, we get a value of negative 18. Now, futures follow the cash market. Okay. Right now, S&P futures are overbought by about 16 points relative to cash. Okay. Now, the cash market is always moving and it gets a little more volatile as the session opens. Okay. But as we are looking at futures being overbought relative to the cash market, at the open, we look for that balancing. Okay. If futures are overbought and price approaching a supply zone, but smaller time frame on get a little more detail, reduce the risk on the trade. Futures overbought coming into a supply zone. Okay. It's a high probability we'll get that price will come down to balance out with the cash. Futures are a derivative. They only follow the cash market. They never lead it. So by taking measurements of the cash market, compare it to the futures to see if futures are trading at a premium or whether they're trading at a discount. Okay. All right. Let's keep moving on. NASDAQ. NASDAQ, we do have a prep screen zone up above, and we're breaking out on a daily chart. Price about ready to break out. If we see that pop up to about 22,238, that would be the 88.6% retracement. Okay. Often a lot of double tops, double bottoms have that 88.6% retracement. Okay. On a smaller time frame, we have refined the zone. We have a prep screen zone, 22,281 by 22,311. So in a perfect world, price moving up, we look for the opportunity for taking to sell short in a supply zone. Okay. Now be mindful of what the trend is doing. If you're taking shorts in a supply zone in an uptrend, then manage your expectations. Okay. It's a short-term trade. It's a counter trend trade, not something you just get in and just like, all right, it's going to the moon. Okay. Let's see. And as far as the NASDAQ goes, always in the pre-market, you want to start looking at the top large market cap weighted stocks. The NASDAQ and the S&P and the Russell, those indexes they derive the price from, those indexes I just mentioned, NASDAQ, S&P, and Russell, are market capitalization weighted index. Okay. What that simply means is a large market cap stocks influence the index more than the smaller market cap. So I did a search and found out, what are the top 8 largest market cap weighted stocks on the NASDAQ? And this is what I came up with. Apple, Broadcom, NVIDIA, Meta, Tesla, Amazon, Alphabet, and Microsoft. Okay. So as we're planning to make trades in the morning, we can use this kind of as a feeler gauge by looking at how many stocks we have that are negative, how many stocks do we have that are positive, and then we get the feel of whether this is a big gap up or a big gap down. Okay. And right now things are pretty quiet. Meta's down another 244, Tesla up 539. Okay. But relatively, there's no big gaps up or down. So this is why I'm teaching a little bit, because I don't want you jumping into trades right now. Well, the market is waiting to see what we're going to do here at the open. Okay. Let's see. I monitor the large market cap weighted stocks to find where they have supply zones and demand zones, where they're making all-time highs. I want to mention Meta. because this is a very rare thing on Meta. Yesterday was the 18th up day in a row for Meta, and today be the 19th. So we're looking at it's extremely, extremely rare to have that many consecutive up days in a row. Okay, so we're looking at as we use the Fibonacci numbers, we often see that price moves or groups of candles. They happen in 2s, 3s, 5s, 8, 13, 21, and so on. 21 is extremely rare, extremely. Okay, so we're still looking at a couple of more up days on Meta. Okay, Amazon is quiet. Tesla getting a good bounce off of the demand. Okay. The two to watch very closely when you are in momentum trades, whether momentum to the down or momentum to the up, is the two largest ones are Apple and Nvidia as far as market capitalization. Okay. So when Apple and Nvidia are both going up or both going down, probability of that successful trade is going to be a little bit greater. Okay. Oh, we got into nat gas, didn't we? 704. Okay, so got into nat gas, $180 worth of risk. And we're looking for that price to continue back up to that, since we have a wide Globex range, we're looking for that profit target up there, 3.790. Okay. Gold got a nice little bounce. All right, now, as we have just mentioned, the exchange traded funds or that futures follow the cash market. The stocks represent the cash market. So stocks move first, exchange traded funds move second, and then the futures are adjusted with a computer, the Globex computer, okay, up or down, okay? So we want to always be monitoring what the gap up or down looks like on the Russell, the Qs, the Diamond, and the SPY, okay? Now, not only do we want to monitor whether it's gapping up or down, we want to determine what type of gap, okay? Is it a breakaway gap? Is it a runaway gap? Or is it an exhaustion gap? Now, there are different characteristics around market conditions and momentum type trades that once you understand what the gap looks like, you can add more odds enhancers to the follow through. Now, Qs at 27 cents, that's almost like a non-event. Okay. Diamond up 1 penny. We're 5 minutes away from market open, flat. Okay. And SPY. So Qs, diamonds, SPY, all very flat with IWM gapping up $1.08. And we'll see how that looks like on a small time frame. Okay. Now, as we look at the Russell for a potential trade, we need to gather some information. The Globex range, which we've identified here on Russell, is 14 points. The daily ATR is 42 points. This is a very small, narrow overnight range when we compare that to the daily ATR. Now, what that generally means for us is that we'll have more of a trending market with a narrow Globex range. We also want to note that the prior session's high and low, and the Russell is gapping outside of that range at the session open. We're not going to anticipate the gap fill right away. So how do we get into this right now? The potential for the Russell is it's been kind of left behind. It kind of does its own things, but it has very little. It's got another resistance up around this area, But once it gets above that 23, 38-ish, 37, there's nothing in the way to that prep screen zone. So we drop down to a tick chart. Ooh. I'm telling you, these patterns here are absolutely amazing. They break out on the 8 time. But now I'm changing my mind to go long on this. And what we've been noticing with these channel, I don't know what we call them, channel trades, okay, is they often break out on the 8th time. Okay. But what happens here is wherever we get that opportunity to short is they often take out this whole area. Okay. So by looking at what's going on the Russell, I'm going to lean a little more towards trying to find a short trade, but it might be a little more risk. Okay. So we're gonna, there we go. That would be the intent. So Russell's hot on the radar. We're coming right up into that resistance area. I don't have a good place to short yet. So we'll keep an eye. You guys, everybody in the chat, keep an eye on uh, the Russell for me and keep me informed. That'll be a fantastic trade to sit in, but we don't have the right market conditions just to jump in right at the moment. Crude oil, based on what we explained earlier, Globex range compared to the daily ATR right in the middle. See how things are choppy when you're trying to trade the open range breakout on when that scenario comes into play. Okay. Just, there's a lot of nuggets of information that we put out there. Okay. All designed to help you understand the trading environment that you're in. Okay. When to take on more risk, when to take on less. Okay, looks like we're getting a little positive on that gas. We got Russell. Dow. We got to break down the smaller time frame on the Dow. Let's take a look at it. All right, and they're off. Okay, let's see. We got to let them settle for just a moment. But what we already know with the S&P is that futures are oversold relative to cash. Oops, things have changed around quite a bit. 1, 2, 3, 4, 5, 6, 7 Dow stocks up. Oh, 7 down. All right, we don't have anything to do on those right at the moment. Okay. S&P just came up to the first level. When you're using price, time, and slope, okay, right now most everybody can understand price, action, and time. Okay. But when you have that sell territory and the support in play, okay, slopes and angles can play a part if you know what you're looking for. Okay. Now, using that range right there, we use either a Ganfeng using speed resistance to anticipate in slope and angle where we can identify a potential change in direction. Okay. Now, I use this to help me reference a supply zone in the right area. Okay. And looks like we're going to be targeting just up a little bit further. Okay. For that trade entry opportunity. Now, I also want to make another point here. In our Mastering the Charts Part 2, okay, we take a deeper dive into the structures and what's going on with the buy territory or the sell territory. And you notice here that price made a higher high before it broke out. Now, this is what we refer to as like a fake out breakout. Price breaks it. When you make that higher high, you're going to look for that reversal. Okay. And the supply zone is generally deeper in the zone. And we've discovered that using the structures within the buy and sell territory, and then using that whole range to kind of capitalize on where we would like to take risk on a trade. Okay, so I'm going to target that range up there about 6,142. Okay. I'm going to set that trade up ahead of time. For those that are using curve analysis, okay, you may have heard that from another source. Okay, when you have a qualified buy territory and you have a qualified sell territory, you start putting the pieces together. Okay, so you take that whole range, and if you're looking to go short, you want to make sure that you're in the upper 2/3 of that whole range. Okay, you also want to make sure that you made a lower low. Okay, you're just waiting for the lower high to take the least amount of risk. Let's look at some things outside the price chart as we're waiting for trades to come to us. VIX is flat. Advancing issues over declining issues are more on the positive side. As the NYSE opened up, we had a lot more upticks over downticks. Okay. So we're seeing a little buying on the NYSE. Okay. It's at the extreme. The trend, which is our short-term traders index, developed by Richard Arms, also referred to as the Arms Index, okay, is right in the middle. Now you go, what a trade! I get it, okay, but our gauges and the information that we have going on right now are saying, hey, take it easy, don't jump in front of the truck right now. We're coming to you, okay, and we've got to let it wait. So this is what I use as a dashboard to see if we have a trend above 2 or below 60, then we're very aggressively looking for demand zone and supply zone entries about 20 minutes after it makes a high or a low outside of that range. Okay. The trend represents the New York Stock Exchange, the composite, and takes the number of advancing issues over declining issues and advancing volume over declining volume, and gives us a reading. When the trend is high and the markets are dropping, it's time to buy. When the trend is low and the markets are going up, it's time to go. Okay. Guys, there's so much I want to share with y'all. It's really exciting to see everybody from the Singapore and Jakarta coming back in. Okay. I loved working with you guys. We just had such a great time over there. So once I get back over there, let's go for some dumplings, right? All right. All's quiet on the equity indexes. Come back to S&P for a moment. 1, 2, 3, 4, 5, 6, 7 down stocks up. 8 down. So we have 1 negative times 2. Yep. See, look, cash and futures are balanced. When that balance is there, it's more difficult to take a trade. There's no momentum. Okay. No momentum. When we take trades on futures, intraday, we want that little push behind it, some momentum that's going to go. When futures are overbought or oversold relative to cash, then we have potential momentum. Apple and Nvidia both going to the upside, so we're not going to try to short this market yet. The NASDAQ opened inside the prior day's trading range. Okay, so we expect the gap to fill. So let's go back to our smaller time frame and identify where the gap fill is on NQ. I'm going to use the 5 p.m. close. Okay. Anybody take a poke at the NQ on that short? Yeah, sometimes I miss some really good ones here. While doing, sometimes teaching can be expensive. But when you're looking at the charts, and I put the colors on the boxes here so that we can identify a sell territory, where the buyers were pushing price up, where the sellers were pushing price down. Then we look for that location inside of that area. Ooh, chili crab. You got it. Might have to bring Stephanie with us, so Brian too. Brian will help us out. She always knows where the great chili crab places are. That one on the beach. Yeah, that's nice. On the way to the airport. I don't know the exact area, but yeah, that's a nice place. Uh, let's see. Where was I at? I was still waiting. Notice the shape of the pattern here inside the buy territory. We made a higher high before price took out the sellers. Okay. You've got to get a good picture of supply and demand and where the turning points are. Okay. And that's why I put the colors for we identify the sell territory where we look for the leg base group of candles within that seller's area. And we look for our zones in that instead of looking other places. Okay. Well, the indexes are not doing a whole heck of a lot. Although the Dow looks like it's going to make a stretch. Yeah. Oh, yeah, you're going to have to move to Bali too. You know, eventually we'd like to do some classes and, some live trading over there to where everybody could use it as a kind of a write-off. It's a great time over there. All right, we got a little breakout going on the Dow. Okay. As prices breaking out to the upside. I'm going to look to take a short trade. Now, this is a counter trend trade. Okay. And potentially a counter trend trade. At the same time, I'm going to be prepared because we have this topping pattern. Okay. And then we have our three touches. We have a strong drop. We got a resistance right here. Okay. So there's two places I'm going to look to take a trade on the Dow. Okay. First one is going to be up at the proximal line. And the second choice is going to be if we break below 786. Okay. And we've been noticing that we have to break this down into some small tick charts because this beginning of these sessions, these equity indexes have been a little more challenging, okay, as far as giving us good, clean setups. I really want that Russell short based on the bigger time frame. Okay, Dow's approaching. Let's get back over to the Dow. All right, so on the Dow, we're going to set this one up. I'm going to first set up a breakout trade going back down. Okay. Setting that up on the matrix. Selling short, it's 44,786. And I'm going to keep this with just 5 micros. The other opportunity is getting really close. Okay. We're looking at 44,842. Now, here's a big odds enhancer. Look down at the time. Okay. Between 8 a.m. and 11 a.m. Eastern, we want price to arrive in a supply zone or in a demand zone on the quarter hour. The odds of a successful trade have been much greater. Okay. So price coming up into this 44,842, I want to sell short, anticipating a trade back to the downside. Okay. But I want it to arrive on time. If it comes into that zone earlier than the quarter hour, it often fails and goes through it. Okay. Now, not all traders are comfortable using time analysis. Okay. But in our observation, we have noticed that very often when price arrives in the zone on the quarter hour, our trades have been more successful. Just an observation. If it arrives in that zone earlier than the quarter hour, and earlier being like anywhere from 4 to 5 minutes, you'll get a small move out of there, but then price will go through the zone. Okay. So we take all those observations, and then when we're getting ready to make a trade, we have a checklist. We check to see if futures are overbought or oversold. We look at the time, we look at the structure, we look at the pattern. It just becomes very regimented. Check, 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 check. Okay. I do want to, I don't know how fast the live stream is coming over to all you folks over in Indonesia and Singapore and stuff like, and even in Dubai, we have some students there. There is a slight delay, and right now I'm noticing as I'm watching YouTube on the other screen here, is that the delay is just probably about 6 or 8 seconds. Okay. So have your trade plan laid out, understand your risk. Okay. Always know that there's risk on the trade. And you might be getting some slippage or what appears to be slippage because of the little delay in the data as it arrives to you. Okay. So be prepared for that. All right. So we got the Dow set up. Swing. Hey, there we go. How are we doing on the nat gas? There's a good picture, Harvey. We still have a little bit of time. That's our timeline right there. Open range breakout trade. Okay. Now, if this dollar amount, we're trading one contract. It's not like I'm loading the boat to get a bigger number. Okay. That's not what we do here. I mean, we trade with micros and just 1 or 2 contracts to kind of keep it real. Okay. If this matches what your daily goal is, okay, or if you're getting butterflies in your tummy saying, this is great, it's probably time to look to take a profit. Okay. We do have another opportunity if price arrives up in a supply zone. Okay. It's a counter trend trade up at top. We can capture part of that move back down. Okay. The reason I'm mentioning that is I kind of hit my feel good button. I mean, that $350, that's not a bad way to go. If we could do that once a day times 20 trading days, what would that net you? Now I'm going to grab that. Let's come over here.
Order filled.
Okay. So a successful trade on nat gas. Now, all right, let's keep moving on. Gold still holding that support. All right, see, the picture has changed a little bit here on gold. So let's drop down to a smaller time frame. We now have 3 touches. This was our 3rd touch. Okay. In order for us to find support, we need minimum 3 times that price has hit this area. Now, this just simply means that there were more buy tickets than sell tickets at this area. No magic.
Order filled.
Just order tickets are bigger. We just got the Dow. Okay. 5 micros on the Dow. Let's come in and place a protective stop loss. $44,826. Okay, placing a buy stop market, my protective buy stop. Now, as you start working more with us here at the Market Institution, okay, we focus on that psychology as well, okay? And you always need to acknowledge what your risk is on the trade. We got $110. Okay, so my risk on the trade is $110. Okay. Got to manage that risk. If price continues to go down to our demand area, okay, then you can calculate what your potential reward is. Now, everybody's going to have that little button that when you make a certain dollar amount, it's going to feel good. I encourage you to grab the money, okay? Because what you're doing psychologically there is you're rewarding yourself for a good entry, a good risk management, and you're taking a little money. After you get comfortable doing that, okay, then you will start to learn to stay in trades longer, okay? So I'm gonna let this work. If I am stopped out, I lose $110 on 5 micros. I will look to take a short in the supply zone. See, by having a forward-looking technique, we can anticipate our risk ahead of time. We can anticipate the action to take when price arrives there, okay? Let's get back to the Russell. I want that Russell. All right, so we got Russell. Let's get this one out of the way. Still waiting on the S&P. Just making little adjustments. About 9 minutes to the top of the hour. 85% of the time, market changes direction at that 10 a.m. reversal. So price arriving in a supply zone at 10 a.m. Eastern on time may give us a pretty good opportunity. If it arrives early, then we're going to anticipate price to continue going up. Okay. All right. Some of the charts that we have out there. Let's see. We got platinum. Ooh, big drop on platinum. We got bean oil. That was on my list to take a breakout to the upside. Corn also set to take a breakout to the upside. Aussie dollar just hit the supply zone. Okay. Let's come out to Aussie dollar. Okay, price it in a supply zone. Now, what should I reference if I want to take this trade? Besides looking over to the left-hand side of the chart to see the setup. Yeah, I want to see if it's in a zone, qualified. Okay, so I do have a sell territory. We made lower highs before price took out the sellers, so we're right there. Okay, price arrived on time. What else do we need? We need to bring up. Where is it? Did I close it down? Oh, here it is. All right. So we're always going to monitor when we have good trading environments. Okay, we're going to monitor what the US dollar is doing and the 10 and 2-year yield. Okay, we want to make sure they're all correlated, going the same way. That's a better trading environment. If the dollar is going to continue going lower, then Aussie dollar will look to move up. Okay, we're looking to short the Aussie dollar futures. Okay, so we want to look over to the left. Let's expand this and see if the dollar, US dollar, is coming into a demand area. It's got a little larger time frame. And look at that. All right, so let's start off just doing a quick little assessment. We're going to start with our 5-step process. Okay. Now, if you haven't taken our Training the Eyes course, Mastering the Charts Part 1 and 2, okay, you may want to get a little more familiar with this. Step 1, we identify resistance or support. Step 2, we identify our buy territory. Okay. Now, as we're looking at this particular structure, let's break down the time. Let's drop down to a 2-hour chart. Get some detail. Okay. We can see that price made a higher low before taking out the sellers. Okay. So what we're going to anticipate is there's some leftover unfilled orders in the upper 2/3 of this buy territory. Okay. Now I still need to drop this down. It's at 119. I need to find the leg base group candle. And it looks like we have one right in that range there. Okay. So we found a demand zone within a buy territory below resistance. Okay. So we anticipate price will change direction there. And if you're wondering about the structure pattern, here's one right here that worked. Okay. See, once you get familiar and train your eyes to see this, you start to see where the opportunities for leftover unfilled orders are at. And it's pretty much the same pattern over and over again, following the steps. Okay. Now, within those patterns, you do find a lot of information as well. Okay. So it appears that we got a little bit further to go down on the US dollar to get to demand. Okay. So what does that mean for our Aussie dollar trade? What should we do? Jump in right now, just thinking, oh, it's going to take the short? No, we use the dollar as an odds enhancer. If dollar is going to continue to go lower, down to demand, then Aussie dollar may continue to go up until we get kind of that perfect storm. Okay. Woo! Whew, kind of slow, isn't it? Here we go. Okay, now let's get some management rules in place. If you've taken the trade short on the Dow and you said, hey, I'm willing to risk $110 on 5 micros on this, we have a 1-to-1 from your stop to your entry. Okay. So there's a 1-to-1. 1-to-1 kind of lines up with an area where there were some buyers. We have a little bit of a small support right there. Okay. So just beyond that 1-to-1, 78% of the time, the first time support or resistance is tested, it's going to bounce. Okay. So at 1-to-1, I may not adjust my stop loss just yet. At 2-to-1, then I will look to adjust my stop. Okay. Because we're running into a leg base group of candles. Okay. So as price starts to move lower, we're going to look at 1-to-1, 2-to-1, 3-to-1. Okay. We got a potential for maybe a 5 or 6-to-1 type trade. But you need to know what your trade plan is to adjust and downside your risk. Okay. 2 minutes away from the 10 o'clock hour. And we've been having good trading days all week, so it's not a surprise that Friday is kind of quiet so far. All right, S&P futures are trading at 425. We have 8 down stocks negative. 1, 2, 3, 4, 5, 6, 7, 8, 9 positive. So we should be at +2. And we're +4. It's kind of frustrating because cash and futures are relatively balanced. So there's not futures not overbought or oversold at the moment on the S&P or the equity indexes. Sure want that, Russell. No clues. We're slowing down on the upticks and downticks on the NYSE.
Order filled.
Up. Let's get back on to the Dow. I did get stopped out on the Dow. I lost $110. Okay. So I know so many traders, they just focus on the profit and they'll kind of slough off what you lost on a trade, but that's not reality. Okay. We take stops. Okay. Price, we give up to about 3 minutes. If price still comes into this zone on time, okay, we got another 2 minutes that if price comes in here, then I'll still look to take a trade short. Okay. If I need to step away, I'll set it to still short down here at 44,786. And I'll look to hit the market order. If we hit that in just the next minute. Any questions? Anybody? Just post them in the chat. We're happy to do that. Answer any questions along the way. So you'll find that I'm not one of those instructors. Yeah, hold all your questions. Don't talk to me when I'm trading. But I've been doing this for quite a few years. And some of the things that I may be sharing with you are probably a little new. Okay. Come on, pop in there. Let me put that, yeah, I might even go a little deeper into the zone. We just hit the first, speed resistance area, or GAN, if you like that. Okay. I do like the one up above a little bit better, or I'll take the breakdown again, risking about $120 on 5 micros. Okay. So I'm going to target this area right in here, which is roughly about 44,860. Okay. Or I'll take the breakdown again. I'm trying to find a way to get into the Russell trade here, based on what we see over here and the breakout on point number 8. You know, often this whole range gets retraced. So yeah, Miss Chris, we did take Nat Gas with the open range breakout. I think we netted about $330 on that trade, one contract. This line that you're seeing right there, that's our timeline using the peak. And that's where we'll anticipate that if price comes back down to that open range area, we'll look to take it long again. Okay. Or if it hits our supply zone up here, we'll look to take the trade short. All right, let's get back over. What are we doing on the S&P? The BKX is often a good odds enhancer as well. The BKX is 24 national and regional banks in an index. Okay. So if the BKX is moving up, it simply means that money is inflowing. Okay. The don't fight the banks. If the banks are moving up, then we want to keep trading in that direction. I had intended to take a short trade, okay, but I'd like to see the BKX below the moving average before initiating that. Okay. Price did break the lows. This is a point where we could look for a lower high in this area. It is elevated risk because the overall trend is still to the upside. Okay. And on the S&P, you have about 4 points risk on that. If you take a look at the leg base group of candles, you'll see that the leg candle leaving is bigger. So price may go a little deeper into that zone. If it goes deeper into the zone, I want to see where that 88.6% retracement is. And that'll be an area within the zone that I'll look to take a trade short, or I'll let price tag that area and come back out. Now, remember the time odds enhancer that I was just sharing with you. What time is it now? Now you got 7 minutes to the next quarter hour. So if price comes up into that supply zone before the quarter hour, price may go through it. Okay. We haven't seen any weakness on Apple or Nvidia. They're still pushing up. Large market cap stocks. Okay, we're seeing a little weakness on Nvidia. It's kind of flattened out. Okay. But these are great odds enhancers. If they're both going down or both going up, great for taking trades long or short. Okay. If one is flat and one is up, it's going to be a little more choppier environment. Now we're hitting that proximal line 6 minutes ahead of the quarter hour. If you choose to take this trade going short, you're taking a little extra risk. The risk must fit your trading plan. Okay. All right, so I'm going to look to take a confirmation entry. As price comes into that circled area, I will look to enter short at 44,824. See, a lot of these, what we do here at the market institution is we want to train your eyes to look for the right picture on the price chart. Okay. The picture can tell you whether you're taking more risk going against the trend or whether you're taking less risks going with the trend. Okay. And that's really important for a trader. Now, if you're new to trading futures or you've been trading futures for a while, okay, and you haven't had really great success, I'd like to introduce you to, we'll go ahead and post that in the chat if you would, team. Our affiliate that we're working with, Elite Trader Funding, okay? And you can use other folks' money. First, you qualify, okay, by showing you can trade, manage risk, okay, and show some profitability. You have a lot of different opportunities on that. Let me just bring that up real quick while we're waiting for price to come in. I'm going to share you, we're going to post a link in there for a promotional code so you can get a really good price, okay, to get started. Now, the proprietary trading account, okay, and you can see right here, I mean, this is a fantastic deal. You keep 100% of your first 12,500. Wait a minute. I'm going to trade. I'm going to see the different evaluations and choose which one I can trade. If I want a $50,000, oh my gosh, look at that, $50,000 account. See, I have a maximum drawdown of 2,000 and a profit target. Once I reach that first profit target, I pass my evaluation, and then you move into a simulated funded account. Okay, that one you get paid on. Okay, now if you're still struggling at trading futures and you need time to train your eyes, this is a way to get some additional income. Okay, by getting funded, by trading these accounts, okay, and passing the evaluations, okay, you can draw some additional income without taking additional risk. Oh, look at that.
Order filled.
All right. I think did we post that in the chat for everybody? Thank you. All right, so we got another trade. Look how it went right to the circle and come out of it. This is a higher risk trade. My stop loss is going to go 44.6 or 44.864. Let me adjust my stop. Can we put it in our chat? Okay, if you want to know more about our Elite Trader Funding, we can't seem to post our link in the YouTube. Just send an email to the admin at themarketinstitution.com and we'll send that. Elite Trader Funding has several platforms you can work with, okay? And you can use TradingView, and I think you might have to pay for some data on that. You can use, yeah, there's a lot of them you can use on that, okay? Yeah, check their website and we'll be happy to answer any questions on that. Yeah, Matt, you were mentioning you needed some more capital earlier to keep trading all your good setups. Well, here's a way that you can double dip. Uh, okay, so we did get a nice entry. Our stop loss is in place. We have $82 worth of risk and we're trading 5 micros. Okay. And this is we're looking at a profit target down here. If you want to do something that's a little more statistically proven, you can use the ABC tool, where you can have target 1 and target 2 for a short-term trade. Kind of cool how it turns, right? But you still have risk. Anybody jump in on the Dow trade? If price breaks here, look, we just added on another 5 micros. Okay. Oh, nice job, Abdallah. I'm glad you're testing the waters here. CL? Oh, wow. CL's coming into play. Something must be out. On CL, we do have a support here, so make sure you know where your breakout trade is. Okay. We shied away from the open range breakout trade this morning. It was just too choppy based on Globex range compared to the daily ATR. Okay. Price made a higher high in this structure before hitting this. Okay. When price makes that higher high, you want to anticipate the bounce off of this support. Okay. Can be much bigger. Okay. We also, looking over to the left, you can see this little area right below it. It is very common that when you make a higher high before price takes out the buyers down here, this area we refer to as a speed bump. Okay. And in that speed bump, you can look for the leg base group of candles. And there is one right there. This is a trap. Okay. Price made a higher high. We got a nice solid support. Price dropping into that demand area. Okay. Or the speed bump. Okay. We could anticipate price coming back out of this. Okay. Now, some of the statistics and things that we talk about. Oh, the team got on that. Yeah. When we're doing the live trading like this, the team is taking generally the same trades that we're taking here in the room here. It is kind of following the trades. Makes it kind of easy when you're using other capital, right? Okay, so we did add on a little bit there. Another 5 micros. And I currently now, with the additional 5 micros, I have $287 risk on the trade. Okay. Whoa. What happened to platinum? Copper coming down. Aussie dollar. What's the US dollar doing? Yeah, you've got to use things outside the price chart. Okay. Let's go back 60. Things outside the price chart will help you determine if you want to take risk on the trade. Okay, especially the US dollar, the 10-year and the 2-year yield. Okay, they're very good odds enhancers there. I like that there were some unfilled orders here as we're looking at Aussie dollar. I chose not to take that trade because what the US dollar was doing, it was not at a support area or a demand. Okay, so we're getting a little pullback roughly because of the time. Okay. And we need a little more commitment from the US dollar. Japanese yen also looking to move up a little bit further. Ooh, all right. We get that fake out breakout, price come down. We do have a leg base. We now have a sell territory. Price has dropped into a leg base group of candles. We have resistance over here. We have a buy territory. Price is in the leg base. Another little area right over here. And we've got two little levels together. So I'm going to change this. I'm still letting my micros run. Okay. So GCJ25. Let's go to the large contract. Now I'm going to be a little more conservative because, you know, it looks like somebody jumping out of gold at market. Okay. Right where the buyers were pushing price up before. So we're going to look for an entry 29.23. And then I'll make my protective stop about 29.19. Okay, now the regular contract on gold pays $100 per pays $10 per tick. Okay, $100 per point. Okay. So you got to understand your risk getting into the trade. We'll let that one work. Approaching first target on the Dow. So how you folks doing from Singapore? And is this something new that you've I mean, if you haven't seen what we do in the live trading room before, you know, let us know how you like it. Okay. We're in the Dow. And I want that Russell. Don't have a trade set up yet. Even on the tick chart, I'm still waiting for price pattern to come into play. We do have 3 touches of support here. And still working on a support. I know Chris says, hit the button, hit the button. Wow, Dow's looking pretty darn good. Approaching the first target for the Dow. Are you still in it, team? Nice. Another happy dance here on Friday. That copper, I'm just going to step out of copper.
Order filled.
Beautiful. I'd like to remind everybody that we're starting to do some little short take classes on Friday. These are free. Just little explanations on different things that we use here at the Market Institution. Okay. And that'll be 1 hour after we finish the class or live trading room. For you folks over in Indonesia and Asia and things like that, if you have a more preferred day and time to do some of these smaller classes, let Dendi know. Let us know what works best for you, and we'll happily accommodate some time. It's getting pretty late over there. Okay. But every Friday, we're going to start doing just some small classes. They're about 45 minutes to an hour long, where today's one a little more on the basics of futures. So if you're new to trading futures, it'd be great. If you want a little review of that, then jump right in. Okay. We'll post the link for that if you haven't registered already. Okay. Oh, come on, Russell. I'm trying to remember all of the promotional stuff that we have going on. The team is amazing. They keep oh, here we go. If you're interested or want a direct link, scan the barcode. Okay, this will take you out to help you identify with your prop trading account with Elite Trader Funding. Okay. Just scan that, save it for later. I don't want to get too aggressive on Russell, but I want that short. The potential on the Russell has got one of the biggest moves based on the price pattern. Okay, but you do need to have a qualified setup. So we offered some promotions out there for your live trading room as well. You know, sign up, get access to it. If you took the trade on the Dow, you just paid for your monthly subscription. We operate with the view of let the market pay for what you want. Okay. If you want to use the live trading room to help you do that, okay, well, we just make sure the live trading room gets covered when you get to trading. And we do have some other promotions going on as far as mastering the charts part 1 and 2. Love to have you take those so that you get up to speed and you can draw charts like what we're posting on our Discord room with Greg and Abdallah and Matt. Okay, posting a lot of those. And all of our other students also post some really good information there too. All right, that was that second area where we anticipated a bounce. Crude came down to the speed bump. So play defensive on that. Nat gas, well, ran up to the timeline, is neither at our supply zone nor at come back down to the open range. So no trade on that. And gold going way deep in the zone. I'm going to cancel that order now. Wait for another setup. Our exchange traded funds, not doing a whole heck of a lot. It looks like we got a 1-to-1 on Aussie dollar if you took that. I chose not to because of the where the dollar was at. It wasn't in a demand zone. Silver coming back down to demand. Platinum. Looks like it wants to go a little deeper. But that zone is in the wrong price. You might get a bounce. The price did make a higher low going into the sellers, so. Yeah, the metals, just everybody taking a profit on them, it looks like. Okay, we do have the 30-year, the 10-year, and the 5-year in supply zones. Okay, if the dollar keeps going lower, these will go up. Okay, so even though they're in a supply zone and you want to take the trade, use the US dollar as a reference. Okay. If the US dollar is not in a demand or supply, while the bonds and notes are in supply. If the dollar is not in demand, while the bonds and notes are in supply, okay, there's elevated risk in taking those trades. So, okay. Oh, yes, Monday, as we're kind of coming to a close of our live trading room session. Monday is President's Day. The markets will be closed, so we will not be doing a live trading room there. But check our Discord room. I'll be up. I'll be looking around to see what's going on. We'll be in the Discord room as early as Sunday night when the market's open, because there's been a lot of activity with tweets and updates and things like that. So we have the Discord room where you can have your live channel. Okay, we'll take a look at that, and we'll see how things work out there. How many are still in the Dow trade right now? The other thing I'll mention about our Discord room, okay, is look down the menu. We have announcements. Okay. These are how our team communicates with you. We do that about 3 different ways. Okay. So see what we have there. Okay. Also, if you want to get some social proof of what we've been doing, okay, in our live trading rooms, we have mastering the charts, recap and review. Each week on Wednesdays, We do a recap and review where students can ask questions, can, we recover what we did in the live trading room. You can see what our prep screen looked like. You can see our picks that we're looking at. You can see the live trades that we took in the live trading room. Okay. So it's a great resource to go in there and kind of look back and say, okay, are these guys worth it? Okay. And do your research on that. Okay. Question, yes, you can, everybody has access to the Discord room. If, I think the link might get posted there. Okay. Or you can, reach out to, admin at themarketinstitution.com, and we'll happily send you the link. If you're working with Dendy, Dendy can give you that, the Discord community room link also. Okay. Backup for the backup. How we doing? Do we get all of that? Oh, tell me, like and subscribe to our channel. You guys have a good time today? Anybody make money with trading today? Kind of the smaller trades, but the methodology that we look at and the approach is what we're getting into. Okay. So I'm going to wrap up this session. I will see many of you in about 55 minutes in our Futures Boot Camp little class. That'll be about an hour long. We have a lot to cover there. I appreciate everybody for coming in. Yeah, like and subscribe, and let us know what we can do to help you out, become a successful trader. Check out the Elite Trader Funding and see if that's something that you'd like to do. Let us know. We can help you get involved with that as well. Have a great day, everybody. Thanks again, and happy Friday. Happy Valentine's Day, everybody. Super job today, team.